Yeah, good morning, traders. Chris Weston here, Head of Research at Pepperstone. Well, we've seen the close out of the US market. It's been a somewhat positive affair. Certainly, value has underperformed a little bit. If you look at the Russell, it's down 1%, but the other bourses are generally looking quite perky at the moment. Europe's looking okay. We've got the DAX up 1.2%. We'll have a look at that in a second. It's certainly been a heart-stopping 45 minutes for us English. It does look like it's coming home, which is fantastic. England-Italy final, so obviously have to see how that goes. But we got the result that we needed, and it was probably well deserved as well. Credit to the Danes; they put on a good fight, but I think the better team won at the end of the day. But let's have a look back to markets, because we have seen a somewhat upbeat session. There's been no outrageous moves to talk about, so to speak. But if we have a look at the FX market straight away, we can see the performance relative to the dollar, with the Mexican peso having the best performer, up 0.5% relative to the greenback. The South African rand up 0.5%. Kiwi dollar finding a few buyers against the dollar. You've probably been short euro. Kiwi's been a good trade on the day. Short Aussie Kiwi's been another good trade as well. You're getting that clear diverging policies, where some people are predicting that the RBNZ could raise rates later this year. ASB Bank, certainly one of the banks on the home front there, looking to call rates sooner rather than later, and you're getting that wider divergence playing through. The British pound's somewhat unchanged relative to the greenback on the session, but something to keep an eye on there. If we have a look at equity markets, let's just go through what we've been seeing. As I say, we've seen the DAX moving up 1.2%. You've got this downtrend playing through with a series of lower highs. If we get a break of these levels here around 15,700, that could be looking to push to new highs in that market. That could be one for the momentum longs to look at. We've seen a nice breakout. It does seem that the bulls are starting to wear back some control there, so that might be a market that you want to put on the radar. S&P up 0.3%. As you say, the Russell down about 1%. So really, that's been a reflection of lower bond yields. People want to buy value stocks, and certainly banks, when you do get a situation where bond yields are moving higher. That's not happening at the moment, but we'll have a look at the bond market in a second. But you can see implied volatility down a touch. The VIX down, all of 0.2 of a vol, so not a huge move there. Implied vol is still sort of indicating that the S&P is going to move up or down about 1% on a daily basis on average over the coming 30 days. If we look at the Nasdaq, you've got, that market's pretty much unchanged on the day, to be honest, up a little bit. Actually, if we go into the stocks, it's been really interesting because people have been buying a lot of these high-tech companies because of defensive situations. People have been talking about lower growth. Bond yields have been falling. That's made the cash flows of these businesses very, very attractive. If you can see here, Amazon, which has been in absolute beast mode at the moment, finding a bit of indecision, but that can't really be said about Apple. Have a look at the move that we've been seeing in Apple. 123 up to 144 in the post-market. Very, very strong moves we've been seeing in Apple. That's really shown good leadership again for the market there. Google's closed up 0.2%. If we go into the meme stocks, though, AMC down nearly 10%. That market's cracking at the moment. This idea that Robinhood are going to list at some stage, a lot of people are saying this could be the high in meme stocks, and something that we do need to keep an eye on. We talked about Baidu yesterday. That market's now coming down back into support levels around 177. This is a level that we've got to be looking at. The chart at the moment, very interesting. You've got this big sort of head and shoulders pattern coming through. Obviously argues for much deeper levels playing through, but we want to break 177 to increase the confidence around shorts. Emerging markets not really doing a huge amount. GameStop down 4% on the session. There's your meme stocks. Equity market's relatively mixed. The DAX has been your best performer there. Let's have a look at the dollar, because it has been a lot of focus on what's happening in the FOMC minutes. I'm not sure we learned a lot, to be fair. We did have a look at what the rhetoric is. I mean, if you go into sort of 5-minute chart of the dollar, just to have a look at how things have performed overnight. Well, look, this is where we got the Fed meeting coming out, and you can see that the dollar index did fall through that period. So the market obviously was long dollars and was expecting a little bit more of a discussion around the dot plots. I think they downplayed them a little bit there, but people came out and bought dollars after that sell-off that we've been seeing. And last couple of hours, it's really not done a lot. I think everyone's just had their eyes on the football. But if you have a look at the daily chart, just to give us that context, I know a lot of our clients don't trade off daily charts. You're trading in much shorter time frames, but it gives you a good idea about the context. We've got new highs in the dollar there, so you can see it's broken out. Can this trend, or is this going to be a fake out? That's the question we've got to be asking ourselves today. So with yields falling, and also you've seen that in German bond yields as well, we always look on a relative basis. You would say that the dollar probably might underperform, especially when you've seen inflation expectations moving lower. But what we have seen is real yields in the US moving higher. So you've got 10-year real yields trading negative 96 basis points, up a couple of basis points. 5-year real yields up 3 basis points. That's putting a bit of a bid back into the dollar. You've got to have a look at this dollar CNH, the one I keep talking about. We're just still sort of hovering along. We're going sideways. That's taking a bit of volatility out of the FX markets more holistically. But I think, we still continue to look for this 648 level. If it breaks through that, then the dollar will continue to rally against other currencies, in my opinion. Dollar CAD breaking out to new highs there. It's not convincing at this stage, needs work, but that's one for the radar. Let's have a look at Aussie dollar. Again, not a huge amount, big, decent range on the day, but we're still just hitting those bottom of this range lows at the moment. Needs a bit of work. Again, we'll just see what happens on that one. Let's have a look at Aussie yen. We like that one for the sort of proxy of risk. We're just holding these lows that we saw from yesterday. A little bit of buying playing through, nothing substantial. There's not really a huge amount to write home about on that cross. Okay, let's go into the commodity trade. Well, we've got oil prices. They actually closed lower, about 1.6% in WTI, 1.5% in Brent. We continue to watch that one. It's something that we've been talking quite actively with clients at the moment. It's a little bit oversold. If we have a look at that, we've got the bearish outside day reversal. It's seen the follow through selling. We got down into sort of 71.10. Can we hold these lows and build back into the 5-day exponential? That would be the level that probably, if you're looking to sell, that's where I would be looking to sell into, because we've now got this trending lower. But we have seen that lower on the day, and of course that's taken some of the wind out of the energy stocks, which if you look into the US, into the S&P, we have a look at material stocks, we're actually up 1%, but energy was the worst performer, down 1.7%. Healthcare was doing all right, but you can see the sectors that happen on the S&P. Let's have a look at gold. Actually, it's really interesting because gold's up 6 days in a row. I can't remember the last time we saw that. It hasn't been a particularly explosive move. And actually, if you wanted to be long in that move, probably the best currency to be long gold in that move has been in euro terms. So you can do that with Pepperstone. We offer gold in alternative currencies, but you can see it has been breaking out. It's holding this exponential moving average. So we are, I think the bias is to be long gold into this situation. If we do start seeing a move higher in real yields, if bond yields start moving back up a little bit, then that may take some of the wind out of the gold sales. But I think it has diverged a little bit from real yields recently. That CPI number next week could be a big one there. But we can see that gold price is just sort of meandering up. The volatility is pretty low, but it is making a bit of a move higher. Let's have a quick look at our good friend crypto. DOT's had a nice move up, 5.8%. We've been building this base or this floor, and it just looks like it's grinding a little bit higher. That could be one to look at. I love these patterns when you basically see a situation where the selling sort of abates, it builds a floor, and it starts pushing up. We want to see some real venom come back into this, because they can be quite explosive. But that could be quite one for the radar there. You can see that it's got a bit of a ceiling. Around this kind of 1694 level. Link's been one that I like the setup on, and it's just creeping through this 20 region. Bit of indecision to really push through there, but definitely one to keep an eye on. Ethereum, again, just the buyers just don't have that emphasis at the moment. If this goes, it could be worth having a look at, because I think when these go, they obviously can go, but the volatility's subsided a little bit. Bitcoin not really doing a lot, it's sort of moving sideways. So a lot to look out for. There's not a huge amount of data that I'm going to be generally too concerned about today in the next 24 hours or so. Got my eye on really the CPI print in the US next week, but some interesting moves to play for. Can this dollar continue to kick higher? That's the thing we're going to be watching very closely in the short term.